This is the second quarter update on the Amplify Transformational Data Sharing ETF, symbol BLOK. Joining me for this interview is Michael Venuto, portfolio manager of the ETF. Michael, thanks for coming on.
Great to be back, Jay.
All right, so in this interview, we're going to talk about what happened in the ETF, the positioning, the holdings over the previous quarter. But for folks new to the BLOK ETF, could you just give a high-level overview of the investment thesis?
Yeah, so BLOK is a fund that we've been partnered with Amplify on a little over 3 years. And the thesis was to find companies that are embracing the blockchain evolution, right? All the things that are going on in this transformational change and how we deal with trusted networks, how we deal with transferring data, how we deal with finance, decentralized finance. Blockchain is a technology behind that, and we've created a fund that looks for the publicly traded companies that are embracing this, investing in this, supporting this, mining this, or farming is the new word. And we meet with those managements. We design a portfolio that we think gets people a very nice group of securities exposed to this transformational trend.
So this is an actively managed ETF. As you look back on the second quarter, were there any changes to the investment strategy?
Yeah, so I myself and Dan Weisskopf, who we love to call the ETF professor, are the co-PMs on this, and we think of the portfolio as tracking what's going on in the industry. And over the second quarter, we did see some shifts. Now, not in the strategy itself, but how we were positioned. So first quarter, there was a lot of, call it, beginning of bullish sentiment around the exciting part of blockchain, right? The what they call the public blockchains, or really, most people call them cryptocurrencies, right? So they were all taking off, and we were positioned rather heavily towards the miners. They became almost 27% of the portfolio. Um, Late in the first quarter, early in the second quarter, we saw the volatility come in, right? And the volatility was both to the upside, but also to the downside. So we took some rather substantial gains in the miners and transitioned more towards the transactional companies, the ones like a Coinbase or a Voyager that are making their revenue off the volume, less so off of the production of the underlying. So that was probably the biggest shift for us in the portfolio during the last quarter. Now that said, it did work out rather well, right? In Q2, Bitcoin down about 40%, right? The various different trusts that track Bitcoin down, around 40%. And Block, we didn't have the greatest quarter, right? The S&P was up. We were down a little over 12%. I'm proud of that when the underlying commodity, cryptocurrencies that we are, mining or supporting, or our public companies that are accessing is down 40%. I'm pretty proud with how we behaved in the second quarter.
What do you think trigger a move back into the miners on a go-forward basis?
Yeah, so we still have a substantial weight towards the miners. However, the reason we got out wasn't, or the reason we reduced wasn't that we had a crystal ball and we saw crypto declining, right? We didn't know what Elon Musk was going to tweet, and we didn't know what China was going to do. What we did see, however, was mania in valuation. Now, not the valuation of the cryptos, that's very hard to figure out, but we saw mania in the valuation of the underlying miners, meaning, and this always cracks me up, right? The ETF industry, which I've been a big part of for a long time, generates 10, 11 billion a year in revenue in the United States. At the current price of Bitcoin, the cryptocurrency miners are generating almost 20, 25 billion in revenue. So this tiny little segment of blockchain generates almost twice the revenue of the whole ETF industry. That blows me away. It's crazy to think about. Now, they're all doing really, really well. the price of Bitcoin and various other coins, the merge mining that's going on with Litecoin and Dogecoin, the things that are happening with Ethereum, it's all very interesting for the miners. China's, reduced capacity, that's all flowing here. It's all extremely interesting. But the valuations in late first quarter, early second quarter, they were projecting out growth that was unattainable. And for us, that was an opportunity to use the creation and redemption processes of the ETF structure to lower our weights to some things like Canaan and Argo and Riot and Hut 8. This is one of those times where the opportunity set to buy something else helped us avoid a lot of the downturn and the thing that brought us up, right? So the opportunity set created by Voyager, by Mogo, by Coinbase coming public was so attractive in a volatile environment. And the best place to take from was where we saw mania. And it worked out to the benefit of our shareholders.
So when you look at the portfolio today, what changes have you seen from a country allocation perspective?
Sure. So in the second quarter, when we were reducing mining, we also came back to some of our conglomerates and private blockchain concepts. So we did bring the Japanese weights back up, and the China weights obviously went down because of Ebong and Canaan. So in terms of U.S. weights, not much change. However, a lot of the Canadian issuers or miners have started to list on the NASDAQ. So even though our actual country weights aren't going to change, it's going to look like it's changed a little bit just from listing standards. So not a massive amount of change in geography, a little bit extra to positions that we have had in Japan, like Digital Garage and GMO Internet, a little bit less to Canaan and Iban. Although, we're excited about those companies. They're really supplying the machines that all the miners need to
Mhm.
to produce things. But the mania was way too high there for a little bit. So a lot of those companies got to 3, 4, 5% just off of performance, and we reduced them substantially. Both of those are under 1.5% positions for us today.
That really speaks to the power of active management in a space that's going through this type of change as quickly as it is. I didn't even think about the listing standards changing as you're managing through all this and how that affects your country allocations, et cetera. So you really have to be active in the space to capture those returns. You've already mentioned some of the holdings that
Mhm.
you have in the portfolio today. What are two of the three holdings today that stand out to you as we head into the third quarter?
So this is interesting to me. The literally the biggest pure play in the portfolio, um, in terms of size, market cap, would be Coinbase, which only came public in the last quarter, right? So it's amazing to me that the new holdings, the new pure plays, are mega caps essentially. So like you really can't think about this area without thinking about Coinbase. Ironically, Coinbase also marked a top for a lot of these companies, right? Its initial or listing really took the wind out of the sails on a lot of this, and the same thing happened when CME futures came about in late 17, early 18, right? A lot of these companies, the wind got sucked out. I don't think that's going to be a long term phenomenon here. I think we're looking at a good run here for this space. There's just so much institutional adoption. I mean, we see what Morgan Stanley is doing, what NYDIG is doing, what Novogratz is doing. I get really excited. At that point, though, Coinbase to me was also the nexus for that shift in our portfolio towards more of these transactional companies. So one that I get really excited about and doesn't seem like most people know about it is a company called Mogo. They're kind of a fintech of Canada, lending, various different things. It's got a lot of similarities to SoFi, not really focused on student loans, but lending in general. But they also own a big chunk of CoinSquare, which is the Coinbase of Canada, and is in the process of getting a special license. So it's it's this amazing fintech company that owns basically the biggest exchange slash custodian on ramp in Canada. So it's another play like Coinbase. Voyager's another one. I love Voyager's as a diversifier in the portfolio because the bulk of the revenue is coming from transactions in cryptos that are not Bitcoin and Ethereum. Almost 85% of their revenue was non Bitcoin and Ethereum transactions. So it's a massive diversifier in the portfolio. So transactionals would be the ones I'm most excited about at the moment. And there's a couple other smaller ones that we've been building up positions in that I'm sure we can talk about in Q3.
I look forward to that. So when you look at, you mentioned institutional adoption as something on a go forward basis that's going to help the space. How do you see the space doing the rest of the year?
Yeah. So this is always interesting to me. So I see a lot of institutional adoption from a investment standpoint, right? Morgan Stanley trying to find access, NYDIG, all the various insurance companies. You got all kinds of big brand name hedge funds coming in. Um, I mean, I've seen 7 different competitors for block file in the last quarter. We're not going to mention any of their names, but they're all coming. That said, I think our active approach is the way to continue. So I see all that now. That's what everybody's talking about. Then I see the other end of it. I see people using this technology, right? It's actually moving much faster than I thought it would, right? The adoption of NFTs, the adoptions of decentralized finance, all the various things that are actually occurring for use cases are faster than I expected. Right, I thought we were going to stay in the speculation phase a much longer. We're still at around before the halfway mark on the halving and everything. I think we're going to see a nice volatile period with superbly new highs for the whole sector. Not going to say it's a straight line by any means, but my outlook for the rest of this year is interim volatility and ending with a really good return. Not a promise, no guarantees in investing, but that's how we're positioning the portfolio. When we do see things that concern us, we tend to move back towards the private blockchains, meaning the IBMs and Accentures and Alphabets. They're about 5% of our portfolio right now. During the last crypto winter, they were closer to 15. So our outlook is pretty transparent from going to Amplify's website and seeing what our holdings are.
Excellent. Yes, the holdings can be found by visiting the Amplify website or simply going to BLOK-ETF.com. Before we wrap up, you and your partner, Dan Weisskopf, have a new monthly newsletter that's become very popular in the space called BLOK-Chain Monthly. Tell me, subscribers can visit block-chain-monthly to sign up. What will subscribers receive each month in the newsletter?
Yeah, so we're trying to be as amazingly transparent as you can be with the ETF structure. So we are literally listing out everything we did in the last month, why we did it, what we see, who we're speaking to, what the segments are in the portfolio. So as we were talking earlier, we've kind of shifted from miners to more towards transactions. It'll actually in that paper outline what that percentage is. It'll tell you what we got out of last month or what we added to last month. It really breaks down not only the industry but what we're doing in the portfolio on our shareholders' behalf.
Yeah, it's a great read. Again, sign up for the newsletter at block-chain-monthly.com. And to learn more about the ETF, visit blocketf.com. Michael, thanks for coming on.
Great to see you again, Jay.